What is happening, crypto enthusiasts, and welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The market is moving at lightning speed, and if you're not plugged in, you're missing out on the seismic shifts shaping our financial future. Today, we've got a triple threat of must-know updates that are sending shockwaves through the industry. Get ready for a deep dive into how major players are navigating the volatility, where the next big gains might be hiding, and how established giants are making unexpected power plays. This is your front row seat to the action, so buckle up, because you absolutely do not want to miss what's coming next. We're breaking down the strategies that could define corporate resilience, starting with how one major group is building a fortress of financial strength in these turbulent times. This is a blueprint you'll want to see. Then, we're diving into the Ethereum ecosystem, where a significant staking advantage is emerging that could seriously challenge the dominance of Bitcoin's institutional rush. Is this the new king of the hill? And in a move that's reshaping the very foundations of digital asset custody, we'll reveal which major player is now holding more than the exchanges themselves, completely altering the market landscape. Plus, we've got a glimpse into the future of meme coin potential. Stay with us, because this is your essential crypto briefing. Hit that subscribe button and ring the bell so you never miss an update. Corporate resilience under the microscope. The global economic climate is anything but stable, marked by unpredictable shifts and persistent volatility. In such an environment, corporations are increasingly seeking innovative strategies to fortify their financial positions and ensure long-term resilience. One such pioneering approach is the adoption of a Bitcoin Treasury strategy, a move that is not only capturing attention, but also setting a new precedent for how European companies can safeguard their assets and navigate uncertain economic waters. This strategy is emerging as a critical blueprint for building robust financial defenses in turbulent times. At the heart of this strategy is the proactive integration of Bitcoin into a company's balance sheet. Unlike traditional reserve assets, Bitcoin offers a unique combination of scarcity, decentralization, and a growing acceptance as a store of value. For businesses operating in Europe, a region often subject to diverse regulatory landscapes and economic pressures, holding Bitcoin can serve as a powerful hedge against inflation and currency devaluation. The rationale is simple. By diversifying reserves into an asset with a predetermined and limited supply, companies can insulate themselves from the devaluing effects of monetary policies that often lead to the erosion of fiat currency purchasing power. This is particularly relevant in Europe, where economic policies and their impacts can vary significantly across member states, creating a complex operating environment. The implementation of such a strategy involves more than just purchasing Bitcoin. It requires a sophisticated understanding of risk management, secure custody solutions, and a clear vision for how Bitcoin fits into the company's overall financial architecture. Companies exploring this path are often looking at long-term value appreciation and the potential to generate returns that outperform traditional treasury holdings. The allure lies in Bitcoin's historical performance, its increasing institutional adoption, and its potential to act as a digital gold, a safe haven asset in times of crisis. Furthermore, the operational aspect of managing a Bitcoin treasury is evolving, with specialized firms offering secure custody and management services, thereby lowering the barrier to entry for corporations that may not have in-house expertise. The broader implications of this trend extend beyond individual corporate balance sheets. As more companies, particularly in Europe, adopt Bitcoin treasury strategies, it signals a significant maturation of the cryptocurrency market. It indicates a growing confidence among established businesses in the viability and security of digital assets. This collective move can lead to increased liquidity, greater market stability, and a more widespread acceptance of Bitcoin as a legitimate financial instrument. It also encourages a reevaluation of traditional corporate finance models, pushing for greater innovation and adaptability in how companies manage their capital. The narrative is shifting from Bitcoin as a speculative asset to Bitcoin as a strategic financial tool. But is this the only game-changing financial move happening in the crypto space? Next, we'll explore how Ethereum's unique staking advantages are positioning it to potentially outpace Bitcoin's institutional momentum. Ethereum's staking edge, a new challenger emerges. The cryptocurrency landscape is in constant flux, with different digital assets vying for institutional attention and market dominance. While Bitcoin has long been the frontrunner, particularly in attracting significant corporate treasury and ETF inflows, emerging data and forecasts suggest that Ethereum might be poised to carve out its own powerful niche, driven by its inherent staking yields and a burgeoning ecosystem of treasury firms. A recent analysis from Standard Chartered paints a compelling picture, projecting that Ethereum could reach a remarkable $7,500 by the end of the year, a forecast significantly bolstered by strong institutional demand and unique structural advantages. The core of Standard Chartered's bullish outlook lies in the aggressive accumulation of Ether by both corporate treasuries and exchange-traded funds, ETFs. Since June, these entities have collectively absorbed an impressive 4.9% of Ethereum's circulating supply. To put this into perspective, this pace of accumulation is more than double that of Bitcoin during its own fastest accumulation period in late 2024. This highlights a powerful shift in institutional strategy, with many now viewing Ethereum not just as a digital asset, but as a yield-generating reserve asset. Firms like BitMine, which holds approximately $7.7 billion worth of Ether and aims to acquire 5% of the total supply, and SharpLink Gaming, with 740,000 Ether valued at around $3.3 billion, are at the forefront of this trend. These companies are not merely holding Ether. They are actively implementing strategies, such as stock buybacks, when their valuations dip below net asset value, effectively creating a valuation floor and mitigating downside risk. What truly differentiates Ethereum's treasury strategy from Bitcoin's is the significant advantage offered by its 3% staking yield. This yield, which is absent in Bitcoin's current framework, provides a tangible return on held assets. Standard Chartered's analysis points out that Ethereum treasury firms, such as BitMine and SharpLink, are currently trading at a discount to their net asset value, NAV. This contrasts with Bitcoin treasury firms, which often command higher multiples. Jeffrey Kendrick, the digital assets strategist at Standard Chartered, views this discrepancy as a market inefficiency, suggesting that the market has yet to fully price in the value-creating potential of Ethereum's staking yields. The ability for these firms to generate passive income through staking adds a layer of fundamental value that is increasingly attractive to institutional investors seeking consistent returns. Furthermore, regulatory developments and ongoing technical upgrades are reinforcing Ethereum's position. The potential passage of the U.S. Genius Act, aimed at fostering stablecoin growth, could indirectly benefit Ethereum by increasing overall digital asset adoption. Simultaneously, Ethereum's continuous technical improvements, focusing on enhanced throughput and scalability, are making it a more robust platform for decentralized finance, DeFi, and a more appealing reserve asset. Even amidst minor price corrections, inflows into U.S. spot Ethereum ETFs remain exceptionally strong, with net inflows exceeding $443 million in a single day, extending a positive streak. This sustained institutional interest, coupled with the inherent yield advantage, suggests that Ethereum is carving out a unique and powerful proposition in the institutional investment space, potentially challenging Bitcoin's long-held dominance in attracting corporate capital. While institutional capital flows are certainly making waves, another significant shift is occurring in how these digital assets are being managed and secured. Next, we'll uncover how BlackRock is dramatically reshaping the custody landscape, overtaking even major exchanges in holding both Bitcoin and Ethereum. BlackRock's custody coup, reshaping the digital asset landscape. The cryptocurrency market is undergoing a profound transformation, driven by the explosive growth of spot Bitcoin and Ethereum ETFs. This surge in institutional investment is not only dictating price action, but also fundamentally altering the infrastructure of digital asset custody. In a development that underscores this seismic shift, Major investment advisors are now reportedly holding approximately $18.3 billion in these ETFs, with a significant portion of this capital flowing through custodians like BlackRock. This trend marks a critical juncture, as BlackRock's iShares Bitcoin Trust, IBIT, has amassed an astonishing 745,357 BTC, a figure that now surpasses the Bitcoin holdings of once dominant exchanges like Coinbase and Binance. This move signals a clear preference for regulated, ETF-based custody solutions over traditional exchange platforms. The implications of BlackRock's ascendancy in the custody space are far-reaching. Historically, exchanges like Coinbase and Binance served as the primary gateways for institutional and retail investors to access and hold digital assets. However, the advent of regulated ETFs has provided a more familiar, and for many, more secure avenue for investment. On-chain data reveals a concerning trend for exchanges. Bitcoin's 30-day moving average of exchange inflows has plummeted to its lowest point since May 2023, with Ethereum inflows also seeing a significant decline. This reduction in exchange activity suggests a potential decrease in selling pressure, but more importantly, indicates a migration of assets towards the more consolidated and regulated ETF structure. The concentration of assets within ETFs effectively tightens the available supply on exchanges, a phenomenon that can amplify price sensitivity to even marginal market flows. BlackRock's dominance is not limited to Bitcoin. Its iShares Ethereum ETF is rapidly closing the gap with Coinbase's Ethereum holdings, now managing 3.6 million ETH. This aggressive accumulation highlights a broader realignment in institutional crypto asset management, where the perceived security and regulatory compliance of ETF custodians are paramount. This is further evidenced by the recent inflows into these ETFs. Following positive commentary from Federal Reserve Chair Jerome Powell, Bitcoin ETFs experienced a notable rebound with $219 million in net inflows, with BlackRock, Fidelity, and ARK Invest leading the charge. Ethereum ETFs have shown even greater momentum, attracting $455 million in net inflows on a single day, a trend attributed to institutional appetite for yield-bearing assets, a benefit that staked Ethereum offers but Bitcoin does not. The disparity in custody is stark when comparing current holdings with historical data. Coinbase, once the largest Ethereum custodian, has seen its holdings decline by a staggering 52% since 2019, now holding 3.8 million ETH. While Binance still holds a larger amount of ETH, its growth has also consolidated. The massive accumulation by BlackRock in both Bitcoin and Ethereum ETFs underscores a fundamental shift in investor behavior. Institutions are prioritizing regulated custody solutions, viewing them as more robust and compliant. With Bitcoin ETFs now managing $143 billion in assets and Ethereum ETFs approaching $16.5 billion, the market structure is undeniably being reshaped, with ETF custodians becoming the new power brokers in digital asset management. As the institutional giants solidify their positions, the decentralized world of altcoins continues to churn with potential disruptors. Next, we'll turn our attention to the meme coin phenomenon, exploring a new contender that's generating buzz as a potential powerhouse in the current altcoin season. Bitcoin penguins soaring to new heights in altcoin season. The cryptocurrency market is a dynamic ecosystem, constantly evolving with new trends and emerging assets that capture the attention of investors. While established cryptocurrencies like Bitcoin and Ethereum often dominate headlines, the altcoin season presents a fertile ground for innovation and often for the meteoric rise of meme coins. These digital assets, often born from internet culture and community engagement, can generate significant buzz and, at times, substantial returns. In this rapidly shifting landscape, one particular meme coin is generating considerable excitement: Bitcoin Penguins, BPNGU, which is being positioned as a potential powerhouse poised to capitalize on the current altcoin rally. Bitcoin Penguins aims to distinguish itself within the crowded meme coin space by leveraging a unique narrative and a strong community focus. Unlike many meme coins that rely solely on viral marketing and speculative hype, BPNGU is building its strategy around a recognizable and engaging theme: penguins associated with the Bitcoin ecosystem. This thematic approach can foster a stronger sense of identity and belonging among its holders, potentially leading to greater long-term engagement and support. The project's creators are reportedly focusing on building a robust community infrastructure, encouraging participation through various online platforms and initiatives designed to foster loyalty and organic growth. The broader altcoin season provides a favorable backdrop for assets like Bitcoin penguins. During these periods, capital often flows out of established cryptocurrencies and into smaller-cap altcoins, seeking higher potential returns. Meme coins, in particular, can experience exponential growth if they capture the market's imagination and benefit from strong social media momentum. The success of previous meme coins has demonstrated the power of community-driven rallies, where widespread adoption and positive sentiment can propel an asset's value significantly. Bitcoin Penguins appears to be aiming to tap into this same energy, positioning itself as the next major player to watch. However, the meme coin market is notoriously volatile and speculative. While the potential for high returns exists, so does the risk of significant losses. Investors are often drawn to meme coins by the promise of quick profits, but sustainability and long-term value creation depend heavily on factors beyond initial hype. These include the development of a strong use case, effective community management, transparent tokenomics, and ongoing project development. For Bitcoin Penguins to truly establish itself as a powerhouse, it will need to demonstrate a commitment to these fundamentals, moving beyond the initial speculative frenzy to build a lasting presence in the digital asset space. As the altcoin season progresses, all eyes will be on Bitcoin Penguins and other emerging meme coins to see if they can translate community enthusiasm into sustained market performance. The journey of a meme coin from obscurity to prominence is often unpredictable, but the current market conditions suggest that assets with strong narratives and engaged communities have the potential to capture significant attention and investment. And that brings us to the end of another packed episode of Bitcoin Bulletin. We've covered corporate strategies, Ethereum's staking power, the custody wars, and the rise of new meme coins. All right, that's a wrap on another action-packed Bitcoin Bulletin. We saw H100 Group strategizing for resilience, Ethereum poised for a staking-driven surge, BlackRock dominating crypto custody, and Bitcoin Penguins emerging as a potential meme coin star. Don't miss out on the next wave of market-moving news. Make sure you're subscribed, hit that notification bell, smash that like button, and let us know your thoughts in the comments below. For all the latest, follow us on all our social media channels. We'll see you next time.